Today, Tuesday the 18th of August, 2026, the line between your crypto wallet and your stock portfolio just got much thinner. Kraken has added US stocks for European clients, so eligible users outside the United States can now trade a basket of American shares and ETFs on the same platform they use for Bitcoin and Ethereum. CoinDesk reported the expansion this morning, and it follows a phased rollout that began in late June with 60 securities. The practical message is simple: you may no longer need a separate traditional brokerage to get exposure to US companies. For a major crypto exchange to push into the stock market this aggressively, the reasons matter. Kraken has been building towards this for months. It first opened tokenized trading for US stocks and ETFs in late June, starting with 60 securities available only to eligible non-US clients. Tokenized equities are digital representations of traditional shares, and they trade in a way that feels closer to crypto assets. The big shift now is the wider European expansion and the addition of commission-free stock trading alongside crypto. Kraken has also launched Perpetual futures tied to those tokenized equities, again outside the United States. The strategy has 3 layers: spot-style stock exposure, tokenized versions, and leveraged derivatives on top. That is not a casual experiment. It is a full product stack aimed at traders who are comfortable in crypto but want exposure to US companies without leaving the app. Right now, this puts pressure on traditional brokers in Europe, because Kraken is removing 2 sources of friction: fees and fragmentation. Commission-free trading helps smaller retail investors allocate directly, and having everything in one place lowers the barrier between crypto risk and equity risk. US regulators are a big reason European clients are first. Kraken cannot offer these products at home because US securities rules are far more restrictive, so Europe is the testing ground. For European investors, that creates an unusual advantage: access to a hybrid platform before American users see it. For traditional banks and brokers, the warning is clear. If a crypto exchange can offer stocks, ETFs, and derivatives in one interface, the old mode of being the only place to hold shares starts to disappear. Near term, expect competitors to respond. Binance has already pushed bStocks, its own tokenized stock product, and where Kraken goes, other trading platforms often follow. The backdrop matters. Bloomberg has reported that Kraken is considering going public in 2026. And expanding revenue streams before an IPO makes obvious commercial sense. More stock products, more futures, and more European licenses would strengthen that pitch to investors. The open question is regulation. European authorities have been clearer on crypto rules than the US, but tokenized equities and derivatives could attract fresh scrutiny if volumes grow quickly. Watch for rival exchanges launching similar products and traditional brokers adding crypto in response. The next 3 to 6 months will show whether Europe becomes the proving ground for a much bigger global model. The takeaway is not just that Kraken added some stocks. The distinction between a crypto exchange and a stockbroker is dissolving. One platform now offers crypto, tokenized US shares, ETFs, and perpetual futures, commission-free and outside the United States. If that model proves itself in Europe, the rest of the industry will have to adapt or lose the next generation of traders. The wall has cracked, and the other side looks very familiar.